Okay, welcome everybody. This is Stephanie at MEFA. Thanks for joining us this morning for today's webinar on helping students through the financial aid award letter season and acceptance season. We're going to talk a lot about analyzing award letters, the different components, and the different resources that are available. Again, for those of you who are just joining us, we are recording today's webinar, and I'll send out a link as well as a copy of the handouts, the PowerPoint slides. You can also email me separately if you do need a certificate of attendance for today's webinar, which is worth 1 PDP point. So just a little bit about me. I've been at MEFA a little over 18 years, been working in higher ed financing for over 25 years. I do a lot of programs and seminars across the state at high schools, community-based organizations. I also work at colleges, helping out with open house programs and orientation programs, educating families and students about the education loan process. A little bit about MEFA. Most of you are probably familiar with MEFA. We're a nonprofit quasi-state authority here in Massachusetts. We've been around for almost 40 years now. We have a number of resources for counselors on MEFA.org, including recorded webinars where you can gain PDP points for those. So make sure you're signed up to receive our counselor emails on the counselor page of MEFA.org, as well as follow us on Twitter, LinkedIn, and Facebook so we can keep up with sharing all the great blogs and webinars and seminars and trainings that we have available for not only counselors, but also your families that you might want to share with them. So the PowerPoint I'm using today is the same one that we've been using with families this season to help them with understanding their award letters. So I will use the same slideshow, and obviously I'll be speaking to it from a counselor's perspective. So we want to make sure that you're armed to be able to help families understand their financial aid awards, what their options are if they haven't applied for aid. I have some great tools that you can use with families and students to help them calculate the balance due, as well as some strategies for paying the college bill and developing an action plan beyond just this year. As we know, it really is a 4-year commitment for most families, so we want them to think long-term, not just getting through the first year. So just a quick review of financial aid and the different versions that financial aid can be packaged on an award letter. First, we have merit-based aid, which is typically a scholarship of some sort in recognition of a student's achievements. Most merit-based aid that's given out is based on the overall admissions application and their academic performance. Of course, there are sports and athletic scholarships, artistic scholarships, music, things of that nature, but most of the merit-based aid given out is based on their academic performance in high school. The criteria can differ from college to college, whether or not they even give out merit-based aid, as well as what the amounts are and the criteria to maintain those scholarships. So students who do receive a merit-based scholarship from a school, they'll want to make sure they understand what is the criteria to maintain that scholarship. Is there a minimum GPA that they need to maintain? Is the scholarship tied to a certain program at the college? So if they change majors, will they lose that scholarship? All very important questions to ask, particularly if the merit scholarship they received is a significant amount that will allow the family to afford that school. The student will need to understand that that scholarship is part of their contribution towards the bill, so that if they don't maintain their GPA, they may lose those funds and have a big hole in their award for the upcoming semester. They also want to find out if by chance the student does not retain that GPA that's required, what will happen to the scholarship? Will they lose it all? Will they lose a portion? Will they have a semester to get their grades back up? It could be a number of different options depending on the college and the scholarship. So families need to understand what that criteria is, particularly at the school that they're attending. Now, not every college offers merit-based scholarships. As we know, Ivy League schools, for example, don't offer academic scholarships. All of their students are meritorious, so they offer need-based aid instead, and most of them will honor meeting full need for families. Most of the financial aid that's given out nationwide is based on financial need, calculated formulas. The same formula is used from family to family to determine federal and state need-based aid. Colleges may have their own formulas that they use to determine their own institutional aid. They may have families fill out the CSS profile on top of that FAFSA form. But most of the aid that's given out nationwide is based on a financial need-based formula. One common exception here in Massachusetts that many of you have heard of is the John and Abigail Adams Scholarship. That is a merit-based scholarship based on the students' MCAS scores, being the top 25th percentile of their district. They'll receive a credit towards tuition and fees at any of the public and state universities here in Massachusetts. I should mention that if you have any questions as we go, feel free to write those in the chat feature. Everybody is on mute, so I can't hear you if you're asking questions, but feel free to type those in and we'll answer those as we go. So if you've been working with students, you've probably seen multiple different award letters. They don't all look the same. Some have more information than others, and some are laid out a lot differently. But bottom line, families do need to understand the components of what is on an award letter. The financial aid award letter should show all of the need-based aid that the student received from the federal and state government, as well as the college. They should also see the merit-based aid that a student would have received. Students will find out about the merit-based aid on their acceptance letter typically, and then the financial aid award letter will follow that typically a week later or so. It depends on the school. If families have not received all of their financial aid award letters at this point in the year, we're getting close to May 1st, they should definitely touch base with the colleges that the student has been accepted to where they haven't received their award letters, just to make sure they don't need any additional information, that there's nothing missing. Maybe they forgot to put the school's name on the FAFSA form, and that's something simple that can be fixed. So things like that happen. If they haven't received an award letter by now, they should definitely be reaching out to the colleges to find out if they need anything else. Now, the first things families will see on an award letter is the free monies from the institution as well as the federal and state government if they're eligible for any of those grants or scholarships. They do need to accept or decline all or part of the award, so we'll definitely want to advise them to accept all the free money, and they only need to do this at the school they're going to be attending, that they're going to deposit at. The grants and scholarships, as I mentioned, may have different criteria the student needs to maintain, but it is gift money and free money that the student does not have to pay back. So that is obviously the best stuff to get on an award letter. Work study may also show up on a financial aid award. It is a need-based program that allows a student to work part-time on a campus, maybe 10, 15 hours a week or so, and help pay for that money can be used to help pay for some of the unbilled expenses, such as supplies, books, transportation, miscellaneous expenses, spending money. They can use that to help support themselves while they're in school. The nice thing about the work study program is that the money they receive does not count as income the following year. It does not need to be reported as income on the FAFSA the following year. So that's another nice benefit of the work study program. Typically, we're not going to be applying the work study award towards the bill. Most schools will pay that award out in a biweekly paycheck as the student earns those funds. So when we're figuring out the balance due of billed costs directly to the school, typically we're not going to apply work study to those billed costs. Students may also see loan programs on an award. The most common is a federal direct student loan, which could be partially subsidized, meaning the interest is taken care of by the federal government while the student is in school, so there's no interest accruing on the subsidized portion of that loan. While they're in school, even if they go on to graduate school, the interest will still be subsidized for that portion of the loan. The remaining balance of that student loan would be unsubsidized, meaning interest is going to be accruing on that loan. They may also see institutional loans from a school if they have a small institutional loan program. The other common thing we're seeing these days is federal PLUS loans on an award letter. As you may know, a PLUS loan is a parent loan for undergraduate students. It is a credit-based loan that parents need to apply for, and it is not actually financial aid. It's a resource that families can use to pay the bill, but they really can look at all different resources. They're not stuck with just the PLUS loan if it's on an award letter. This can create a lot of confusion for families because they see the PLUS loan on an award and they think, geez, I got all this money and I have a great award from the school, but that PLUS loan could be a very large dollar amount and it's not actually financial aid. So it can be a little deceiving and it can make the award look a lot better than it actually is. I have a friend that I'm working with her high school senior, and a state university outside of Massachusetts packaged a $40,000 PLUS loan for her family. And I did need to tell her that's not financial aid. It's actually a parent loan that you have to apply for. So just keep that in mind if you do see PLUS loans on an award, to remind families it's not financial aid. It's just a recommendation of one way to help pay for the bill. Now they have to accept or decline all or part of the award at the school they're going to deposit at by May 1st. They have to make their deposit to that school by May 1st as well. The deposit, which could range $300 to $500, will hold their seat at that school, and that will also be credited towards the fall bill. So they'll see a credit of that deposit on their fall bill. And again, if you have any questions as we're going through, feel free to type those in and I'll answer those as we go. So a little bit more detail about the federal direct student loan that I was mentioning. You can see up in the corner in the blue box, the annual loan limits that students can take out. As a freshman, they can borrow up to $5,500. Sophomore year is $6,500, and junior and senior year it's $7,500. So the amount they can borrow does grow as they move on in college, but as you can see, there are limits to what they can borrow. So they might not be able to use this loan to cover their full balance due. So that's important for families to understand that this federal direct student loan is really the only loan out there that students can take out on their own without a cosigner and be able to defer it while they're in school. So those are the big benefits, is that they can, help contribute towards the bill, have a little skin in the game. They can build credit by making payments on this loan on time after they graduate. There is no credit check to get the loan. The interest rate right now is 5.05% fixed. That changes once a year on July 1st. We should be finding out what the new rates will be for the 1920 academic year in another month or so. The feds will announce that. As I mentioned, this loan can come in two different versions. Part of the loan, if we're looking at the freshman year loan, up to $3,500 of it could be subsidized, meaning interest does not accrue while the student is in school. Once they graduate, that's when interest will start accruing on the subsidized portion. So it's basically interest-free while they're in school. The remaining amount of the loan, or it could even be the entire $5,500 if the family doesn't qualify for the subsidy, the remaining part will accrue interest when the loan is dispersed. So although students do not have to make payments on this loan, they could voluntarily make payments towards the interest if they wanted to, so that when they graduate, the only thing they'll have to pay back is what they borrowed, not the interest that has also accrued and accumulated. When they graduate, any accrued interest will be capitalized and added to the principal balance. So the sooner they can pay that accrued interest before they graduate, the better off they'll be. A small fee of 1.062% is also deducted from the loan, so they'll need to take that into account when understanding what can be applied towards the balance. So they won't be able to apply the full $5,500 towards their balance at the school, their bill. It'll be $5,500 minus that 1.062% fee. Students do need to sign their promissory note online and go through entrance counseling online, which is a way for them to understand and make sure that they know their rights and responsibilities as a federal student loan borrower. You can see the website, a screenshot of it is right here, studentloans.gov, and the college that they're attending after they deposit, usually in June timeframe, will be in touch with the student, usually via email or maybe through their online portal through the school, letting them know where to go to sign their promissory note and do their entrance counseling. And as I mentioned, there's no payments due while they're in school, so it is a good option for students to take out if they do need to borrow. We always recommend that if families need to borrow, that they look at this loan first before looking at any other loans, because it is a more flexible loan program. When they get out of school, there's several repayment options they can choose from based on their affordable monthly payment. There's also forgiveness options and forbearance options so that they can maintain a healthy credit as well. Some families may also need to go through verification after they've submitted their financial aid forms. Very important that families are on top of getting this information to the college as they request it. Their financial aid award letter will not be considered finalized and will not be applied towards their bill until this verification process is complete. The college may be selecting families to verify certain pieces of their application for financial aid, or even the Department of Education may be asking the college to verify certain line items on that FAFSA form, for example. What's really important for families to do is just to make sure that they're up to date and they're complying with these requests. They may need to send in tax transcripts, business statements, things of that nature. Whatever it might be, just make sure that they're responding to the college and staying on top of all the mail and email, as well as communications through the college's web portal. And many of this information may also go to the student. So families, parents particularly, need to be on top of that and make sure the student is reading all their emails and opening up the mail so that nothing falls through the cracks. If they haven't applied for aid at this point, it's not too late. They can still fill out that FAFSA form. Federal aid is given out year-round, so there's no deadline for the federal aid. However, for Massachusetts, if they want to be considered for aid from the state, they do need to file that FAFSA by May 1st. Many colleges' deadlines may have passed, but it's always worth checking in with the financial aid office to see if they can still apply for institutional aid, especially if they have a CSS profile form they'll need to fill out. They want to get that done as soon as possible. They may still be able to be considered for institutional aid. Some families, based on their high income, they may think they're not eligible for aid or may not want to apply for financial aid, whatever their reason may be. We always encourage families to apply because you never know what you might be eligible for, especially with the cost of attendance as it is. Even families with high family contributions may still be eligible for aid at some of the expensive schools out there. So it is a good thing for them to do. But if they choose not to, they can still use payment plans, which we'll talk about, which are interest-free budget plans, as well as private loans, such as loans through MEFA that do not require families to fill out the financial aid forms. A few words about the wait list. Very important for students who are holding out hope to get off of a wait list at a school to know what might be in store for them financial aid wise. Many colleges, when they're looking at their wait list, may never even accept students off the wait list. They may have a very long list and not accept one student off the wait list, or maybe 7 or 10, especially at some of the more elite, more competitive schools. So they don't necessarily want to hold out hope and not deposit at one of the schools they're accepted to, because it is difficult to get off the wait list at schools. The other thing they want to know, and they can ask the college this, they can talk to the financial aid office just to find out if they do get accepted off the wait list, will they be eligible for any financial aid from the institution? Some schools, when they're looking at their wait list, may choose students who do not need financial aid, who might not have a high financial need. They may not be giving those students financial aid from their institution, just based on the simple fact that they've run out of money and they've used that on the students they've accepted already. So sometimes that might come into play when they're taking students off the wait list. So it's important for students to know if that's the case, so that if finances are going to be an issue, they may not want to stay on the wait list or formally accept their spot if they know they won't be able to afford that school without financial aid. And I've heard of even schools that meet full need, some of the more competitive schools that are out there, many of them also will only take students off the wait list that do not require financial aid. And again, the amount of students they're taking off the wait list is a very small amount. So just to put it in perspective, but it's important for them to know that. And they also want to make sure that they do deposit at one of the schools that they're accepted to. If they do get off the wait list and go to the school they were waitlisted at, they will lose that deposit at the other school. Typically, it's non-refundable, so they want to know that. It could be, $300 to $500. But once they've considered all of these ramifications and the student is still, interested in the school and think they'll be able to make it work financially, they should formally accept their spot, continue to be in touch with admissions to show that demonstrated interest in the school. If they have any recent grades or test scores or awards that might help boost their application, they should be in touch, as well as over on social media, Instagram, Twitter, and those sorts of things. So it doesn't hurt to, let the school know that they're still excited and very interested in attending. Okay, so this is a tool that MEFA created. We've been using this for quite a few years now. It's one of my favorite tools to use with families. We've had a lot of families coming into the office one-on-one, doing one-on-one appointments as well as one-on-one phone appointments. And we're using this calculator to help them understand and compare their financial aid awards and create a strategy. So feel free, if you have families who are stuck, send them our way. Our phone number and email are at the end of the webinar. I'll show you that. And we can set up appointments with them. Or if they just have a quick question, we can answer those as well. But that's what we're here for. Everything we do is free. So we want to help families understand these award letters and figure out a strategy to pay that bill. So when I'm working with families, I try to get them to focus on the billed costs. So the direct charges from the school, such as tuition fees and room and board if the student's living on campus. And then the other parts of cost of attendance, such as book supplies, spending money. Hopefully they can pay for that out of pocket, or maybe the student can work over the summer and pay for those themselves versus borrowing. We want to try and keep families from borrowing too much. So here I'm going to just show you a quick example of the college cost calculator. I won't fill out every school. I'll just fill out one just to demonstrate. And you can do this with families as well. It's right on the MEFA website. If you go to mefa.org/collegebound 2019, everything we're talking about today is right on that landing page that we created for families at this point in the game when they're looking at their acceptances. So I'm going to put in our tuition and fees. Let's say maybe like about 60,000. Maybe it's a private college. Room and board, we have that on there. They can choose different options, maybe older dorms or living in a quad or a triple to save a little bit of money there. I'm going to add in the unbilled expenses so that we want to make sure that families are budgeting for that so they know that that's money they do have to pay, but it is an unbilled cost. So we'll put in, let's say $1,500 for books and supplies and another $1,000 for transportation for the year. I'm going to put in $0 for health insurance. Very important that families understand they will be billed for health insurance here in Massachusetts. Every student is required to be insured. So families can waive that cost. And we have little bullets here, these little information dots that they can hover over just to get more information about these line items. So we can explain what to do with the health insurance, for example. So they do want to waive that cost on their bill. Typically, a college will ask them to provide insurance policy information to make sure that they're insured. And they can save themselves, close to $2,000 a year just by waiving that one cost. So they definitely want to do that if the student is insured. And then if I scroll down, you can see we have our annual cost down here at the bottom. So over $76,000. So this is obviously a private school, probably up here in the Northeast, maybe in one of the major cities. Very, very expensive. But once we start applying financial aid, maybe we can get those costs down a little bit so that it's not such an overwhelming number. So this student, let's say they have, maybe they're eligible for need-based grants from the federal government, maybe a state grant as well. And the college, between merit and need-based aid, maybe they gave the student maybe a $30,000 merit scholarship and $10,000 need-based grant, so we can put that in there. So you'll notice we have all the gift aid, all the free money is listed separately from any loans. Even though they're both financial aid, we want to make sure that they understand the differences. If they have any outside private scholarships that they receive, they can add these in as well. We have a few websites if they want to do a national search listed here. MEFA Pathway, our school portal for students and counselors, College Board FastWeb, but we want to encourage them to start locally where there's more opportunity to get scholarships with less students applying. And we always advise them to check in with their school counselors as well to understand the process for applying for local scholarships. So we have our gift aid is added here at the bottom. And then maybe we have a subsidized student loan. We have the unsubsidized loan. Add those up, they're $5,500. If families wanted to put in any other resources such as savings, let's say they have a 529 account. Maybe in this example, they've saved $20,000 and they've decided, well, we'll do $5,000 a year towards the bill. And then they can add up to 4 schools total to compare the awards. So if I scroll down, you can see that overwhelming number, that big scary number, that total annual cost. Once we start adding in the aid and chipping away at that bill, we've gotten it down to hopefully a more manageable number, a little over $22,000. And that's the remaining cost that the family has to deal with and figure out, okay, how are we going to pay this bill? Now we've improved this calculator significantly. We've done a lot of changes to it here. Families can now print it as well as save the document. So I've been doing this with families almost every day now, adding in their award letters. I've been saving it and emailing it to them or printing it out for them. And there's also good useful information down here at the bottom, including information about what to do with that Federal Plus loan if they see that on a financial aid award letter. So this is an awesome tool. We use it all the time, and we encourage you to send families to this tool or help them yourself or send them our way, and we can help families understand what their awards look like. Okay, so once they understand, okay, what do we owe? What is our balance due? And they've narrowed it down to maybe a couple schools that are still in the running that the student was accepted to. Then we can help start them figure out a strategy to pay that bill. So the first thing they'll want to look at is, have they saved? Do they have any past income that they can tap into? Whether it be a 529 plan like the U Fund or maybe a U Plan prepaid tuition plan. Those are the state's plans. They can dig out any old savings bonds they may have, stocks that have been put aside for college or student bank accounts, whatever it might be. Want to take inventory. Maybe a mom and dad have generous parents or aunts and uncles who are able to save for the student as well. Maybe they've opened up their own 529 accounts. We have lots of grandparents who are saving for their grandchildren. So they want to understand who has what resources available. Have a big cookout at the end of the year for graduation. Make sure there's a big box by the big cake, and so that aunts and uncles, cousins, friends, and family can put nice big checks in those graduation cards that they're giving to help support the student towards their first year of college. Then the next thing they'll want to look at, if they don't have enough in savings to pay for the bill, then they might need to look at present and future income. And it's important for families to understand if they haven't saved it all, that that's okay. Even if they haven't saved anything, which is the case with a lot of families, that's okay. They just have to deal with the situation they're at now. It's not too late if they have younger children. They can still continue to save for them or open up a 529 account. I've had plenty of families that I'm working with now who have seniors who have said, I wish we had saved, and have younger kids, and now they're opening up 529s for the younger kids. So at least they'll have something in the bank when they go to school. Here's the information about the state savings plans here at MEFA, the U Plan and U Fund. They want to get in touch with us to talk about how to utilize those resources. Then we can look at present income, which is typically going to be in the form of just writing a check out of their checking account, or maybe even using an interest-free budget plan or interest-free monthly payment plan. Most colleges, every college will have some sort of payment plan or budget plan. There's usually a small fee to participate, and it allows, the fee is usually about $50 to $100. It allows the family to spread out their costs over a period of 5 to 12 months versus having to write a check each semester. Most plans are on the college's website, and the college will also send information about their payment plan to the families with the bill, or send a link to enroll electronically. It's a great way to help contribute towards that bill without borrowing by using their affordable monthly payments. Then if they've looked at savings and what they can afford per month on a payment plan, they might still have money due. They may need to look at future income in the form of borrowing. We do have a couple of great webinars coming up in June and July that you can let families know about on borrowing options, where we'll be comparing different loans and helping them understand how to compare and shop around for different options and things to look at, such as rates, APRs, length of repayment, who are the primary borrowers on the loan. Those sorts of things are all very important for families to consider before they actually borrow. Above and beyond the federal direct student loan, any other education loans for the family are going to be based on credit. So they're going to need a good credit history. To borrow any private loans, even the Federal Plus loan, does require that families do not have derogatory credit. With most of these loans, such as through MEFA, for example, Families can borrow that full cost of attendance minus their financial aid. However, as I mentioned earlier, we try to get them to only borrow what they need. Even if they're able to borrow the full $20,000, for example, they can put some of that on a payment plan, apply some savings, and then borrow what's left over. It will help reduce their overall cost. And they do want to think in terms of 4 years, not just one. Even though it's an annual financial aid process, they'd be applying for loans annually. They want to take that first year's monthly payment on the loan, multiply it by 4 just to estimate at the end of 4 years, what are we looking at for a loan payment? Because it might be not easy, but it might be less intimidating to get through the first year. But once they start adding loans for years 2, 3, and 4, maybe they have other kids that are coming down the road, they don't want to put themselves in too much debt. If families are taking out loans where they want the student to pay them back when they graduate, it's important that they understand what the student's capability will be to make payments above and beyond their federal direct student loans. So with their federal direct student loans, they're going to be making about $300 in loan payments with that loan amount of about $27,000 if they borrow the full amount. Depending on their employment opportunities and their career plans, maybe they're going to graduate school, whatever those plans are, they want to make sure they'll be able to afford and help mom and dad pay those back if that's what's expected. If they go to graduate school, they won't necessarily be able to defer their undergraduate loans for graduate school. And when I talk about undergraduate loans, I'm really referring to the private loans. As we know, the federal direct student loans, they can defer payments on that when they're in graduate school. So we want to make sure that families are thinking about all of this versus just jumping into a loan without making plans ahead of who's going to pay that back. Obviously, they want to look at the terms of the loan before signing on the dotted line. Do they prefer fixed rate where the monthly payments are stable, or variable rate, which might be low but will grow over time or could have the potential to grow over time, and the monthly payments will change? Really depends on what their preference is. They also should look at the repayment timeline. Is it a 10-year loan, 15-year loan? The further they push out the payments, the longer the repayment term, the more that loan is going to cost because they're taking longer to pay that back, so more interest is accruing. Very important when we talk about repayment timeline to look at different repayment options that might be available. So with MEFA, for example, we have immediate repayment options for 10 and 15 years. We also have interest only while the student's in school, and they can also defer payments while the student's in school. But interest is still going to accrue on these loans when they're dispersed, even if they're not making payments on them. So let's say, for example, they choose a deferred loan. They can do that, but they should try to make voluntary payments if they can to reduce that overall interest charge that's going to be applied to that loan. If they're not paying down the principal and interest while the student's in school, then it's going to cost a lot more than an immediate repayment loan. And they may also get a better interest rate if they choose to start making payments back while the student's in school versus deferring payments. Many colleges have lender lists of lenders they've worked with on their website, or have different websites that they could go to search and shop around. Obviously, MEFA has programs. They can reach out to us. We'll be setting our rates hopefully in late May, early June timeframe. And knock on wood, hopefully they'll be even more competitive than they are right now. So MEFA rates start at 4.5%. So very competitive programs. And here's a loan payment calculator that's on our website that families can play around with. And I do this with families all the time. I plug in the numbers, different loan options they're thinking about, just so they can understand, well, what is that monthly payment going to look like? So if we look at a $20,000 loan, 4 years before graduation, we can see the different monthly payments and interest rates for the MEFA programs. So what I like about this calculator is It helps to estimate what the monthly payments will be based on the different options they're looking at for schools, whether they have to borrow $20,000 at one school or $16,000 at another. They can run those numbers. The other thing I like to also point out, especially if the student is going to be expected to help make those payments back, is what is the total cost of the loan? So that's a very important number for families to look at. So you can see we have lower interest rates if we start making the payments right away. And we also have a lower cost of that loan, a little over $26,000 versus a deferred loan. That $20,000 loan is going to cost close to $38,000, and it has a higher interest rate. So just some things to consider when families are looking at loan options. And again, if anybody has questions, feel free to type those in the chat. So just to bring it all together, I like to talk to families about payment strategies, combination strategies. Rather than jumping right into a loan, let's look at that savings and present income, see what we can do there. So in this example, our family owes $20,000. If they wanted to use a MEFA loan, for example, it would be about $200 a month approximately. But if they can afford more than that, so their affordable monthly payment is higher than $200, they should definitely look at the payment plan, maybe reducing that balance by tapping into savings. If we were to put the entire $20,000 balance on a payment plan of 10 months, it would be $2,000 a month for 10 months. So maybe they can afford more than that minimum loan payment of $200, but that payment plan for the full $20,000 might be a little too steep at $2,000 a month. Maybe the family is somewhere in between. So in this example, the family has told us they can afford $600 a month. So they have a little bit of student savings to apply towards the bill. Maybe mom and dad have saved in a 529 account $16,000, let's say, and they're going to spread it out over 4 years. So they have a little bit of savings to apply. And then they're going to do $500 a month on a 10-month payment plan of $5,000. So by utilizing past and present income, we've chopped our bill in half before we look at borrowing. And then the other $100 of that $600 affordable payment will go towards that $10,000 education loan. So just looking ahead, timing and what families can expect. Typically, the fall semester bill is sent in June or July, and it's due about 3 to 5 weeks later. So they can expect that. It might be an e-bill. Maybe first year it might be a paper bill. They can download it off the college's web portal. It depends on the school and what their process is. But they do want to leave themselves time to apply for any loans that they may need before the bill is due. Most of the credit-based loans, it's an instant credit decision, so it doesn't take too long to process, but they don't want to wait until the day before the bill is due to apply for the loan. We usually recommend giving them a couple weeks before the bill's due so that they can apply, do their paperwork online, and the school can certify it online to apply it towards the bill. And they also want to set up their payment plans as soon as possible based on the college's schedule. Another thing that families want to consider is private scholarships and understanding the process to receive those, to search for those. We mentioned earlier looking at local scholarships first. Families should never have to pay anybody to do a scholarship search. They shouldn't have to pay a fee online to do a national search or use any of the search engines that are out there. Everything should be free when it comes to searching for scholarships. They should look at every avenue, such as community-based organizations, any foundations their parents may be a part of, or maybe their work, employer, civic organizations, religious organizations. Knock down all those doors, just find out if there's any scholarship opportunities. We have some online search engines here listed. MEFA Pathway, College Board, Student Scholarship Search are some common ones that students can look at to apply for national scholarships. In addition to searching for scholarships to try and save a little bit on that college bill, here in Massachusetts, we have amazing public colleges and universities, community colleges that students can look to as that may be a more affordable option. Maybe starting out at a community college for a couple years, getting their associate's degree. If they get a 3.0 while they're in community college, they will actually get a tuition credit for 2 years towards their state university that they may apply to or transfer to. So that's the state's Commonwealth commitment. There's lots of great resources and options listed here that you can check out. There's also Tuition Break through New England Board of Higher Ed, and they offer reduction in costs for out-of-state schools if their program is not offered in our home state of Massachusetts. We really want to encourage families to work with the financial aid office. Do not be afraid to contact the financial aid office. As counselors, you're probably on the same boat, but families who are going through this maybe have a lot of fear. They don't really know what to expect. They may be afraid to contact financial aid in a fear that they might get money taken away if they ask for more. I've heard all sorts of scenarios like that. So we want to just let families know that the financial aid office is there to help them. They want to help them make the numbers work as best as they can based on the resources they have. So they can talk to the college's financial aid office, set up an appointment if they need to, a phone appointment or in person if they can get to the school. Many colleges offer financial aid sessions at their open house programs, so they can attend those. They want to find out what their renewability criteria is for the financial aid they received at that school. If they're expecting a lot of outside private scholarships and they have a very good financial aid award from the school, then they'll want to know how is that college going to treat those outside private scholarships. Because families do need to report those private scholarships to the financial aid office, and they do need to apply those to the financial aid award. So if the student has had their full financial need met by a college, then the college will need to take something out of their current financial aid award in order to add in those private scholarships. Some colleges that don't meet full need may be able to apply those private scholarships to any gap in the award. Some may replace some of their own scholarship money with the private scholarships or maybe even reduce the student loan. Really depends on the school and the family's award. So they'll just want to know what is the school's criteria. There's lots of ways for them to get in touch. They can call, do in-person, email appointments, whatever it might be. They should definitely reach out to them, especially if they have any special circumstances. Sometimes families aren't aware that they even have the special circumstance. And just by talking to them, we may be able to find that out and recommend that they talk to the financial aid office. I've had that happen a couple times just this week alone, where families may have unreimbursed medical expenses that they didn't realize they could report to the financial aid office. Things like that, they want to let parents know that they should be working with financial aid. So what's next as far as the process goes for families? They definitely want to be making that deposit by May 1st at one of the schools they're accepted to, creating that kitchen table plan to pay that balance due, making sure the students understand what their responsibilities will be to help pay towards that bill, whether it be taking on those federal student loans, working over the summer, helping mom and dad pay back parent loans later on when they graduate. It's good for them to know what their responsibility is. Here's our phone number and email that you can share with families, as well as contact us. I had a counselor call me, I believe it was not last week, and we talked to a student over the phone about different borrowing options and what the cost of that will be and what their monthly payment will be based on the college that they really wanted to go to. And it was a pretty high cost, and it might not have been a manageable situation for that student. They may want to look at a different cost school, or maybe even the community college route is always a good way to save money. It really depends on the student and the family, but we can help them sort that out. So feel free to send those students and families our way. That's what we're here for, and everything we do here at MEFA is free of charge. Please connect with us on social media. We had a great Facebook Live event yesterday. We're always sending out scholarships through Twitter and offering webinars on YouTube and LinkedIn. So definitely connect with us so that you can share this information with your families. We do rely on college counselors, financial aid, as well as school counselors to help us get the word out to families of all the great resources that are available to them here at MEFA. So here's the phone number, email, and website that you can refer families to. Again, that mefa.org/collegebound is a landing page that has all the tools I showed you today all in one spot. So please share that with families, provide a hyperlink on your website. I'm going to open it up to questions right now. I'm going to also send my email in the chat in case you need to request a certificate of attendance. So for those who can't stay on for a Q&A, I want to thank everybody for coming today. If you need a certificate of attendance, please let me know. I'll send a recording of this webinar to everybody afterwards, as well as copies of the handout. So feel free to type your questions in the chat tool right now, and I will answer those for the audience. Okay, I just sent everybody my email and phone number in the chat feature if you need to get in touch with me. Please type in any questions if you have any. I don't see any coming in, so I'll leave it open another few seconds before ending the webinar just to make sure anybody that has questions, they'll get answered today. Okay, everybody, I don't see any questions coming in, so I'm going to end the webinar. But if you think of anything later, feel free to email me or call me or reach out to MEFA and we can help you help your families. I want to thank everybody for joining us today and have a great weekend. And for those of you who have April vacation next week, have a good week off and we will talk to you soon.